Welcome back to Bloomberg News. I'm Mark Crumpton. The euro continues to rally, rising to its highest level in a week against the dollar. Has it bottomed? Kathy Lien is Director of Currency Research at GFT, an online currency trading firm, and the author of Day Trading and Swing Trading, the Currency Market, Technical and Fundamental Strategies to Profit from Market Moves. She joins us now with her assessment of where the euro is heading. And I'm also joined by our Dominic. Thank you so much for coming in. Kathy, good to see you again.
Good to see you too.
What is going on with the euro?
Well, right now we've seen a 3-day rally in the euro dollar, and we have to respect the fact that the euro has seen a lot of short covering. And the question that was burning on everyone's mind is the one that you just asked. Is the euro actually hitting a bottom, or is it going to rally, or is it going to actually turn back lower? So we have to assess what caused this rally in the euro dollar. Part of it is short covering. Part of it is the unanswered questions that we had after the EU-IMF rescue package was first unveiled. Those questions are beginning to be answered, such as the ECB providing more details on their bond purchase program, the German parliament approving their portion of the rescue package, and also the EU finance ministers meeting to actually hash out the details of the entire stabilization mechanism.
Okay, now because of what we've been seeing, the moves we've been seeing in the euro, any chance that we might see it go below 125?
I think that we have a lot of short-term answers right now, but the long-term problems still remain, which is why 125 is not too far from current levels.
Okay.
So I think there is still a very good chance that we could revisit the 120 level, particularly because we're starting to see weaker economic data. And that indicates that these are first signs of the sovereign debt crisis actually weighing on the eurozone economy. And I think that's only going to exacerbate.
Okay. Now, Kathy, I got a question here. You were on with Carol Nasser and I before, about maybe just a couple of months ago, talking about this idea, Mark, that the European Union, the eurozone, so to speak, more of a monetary union and not a fiscal union. You know, there are some real concerns about this shared idea of fiscal policy, and that's a real sore spot for some of these countries. If they fix that, or do they fix that, can that save the euro?
Well, I think that in terms of the fiscal fragmentation that we're having, they are dealing with the sort of hot spots right now. I think at the end of the day, because these are all individual countries, that they're still going to have fragmented responses, especially when growth starts to slow. I mean, we are actually seeing sort of the regulatory reforms that each of these different governments are trying to make right now. And you can see that they're not all happy with each other's decisions, like the German short ban, for example. So I think that this is one of the biggest flaws of the euro. The euro is not going to die. The euro will still be here as a monetary currency unit. But in terms of the problems that make it difficult for the ECB to do their job, make it difficult for them to really pull ahead and engineer the growth that will meet the pace of the U.S., for example, when all the dust settles and we recover, is going to be curtailed because of these flaws and problems.
Kathy, I want to pick up on one of your earlier statements. It seemed like you were indicating that Greek austerity measures could possibly be a vicious circle. In other words, Greece is curbing spending, but that will ultimately depress the economy, which would depress the euro as well. Therefore, are you personally bearish on the euro?
Yes, I am. It's inevitable that these austerity measures are going to lead to weaker growth. It's just a matter of will it be negative growth or will it be flat growth? So I think that, like I said earlier, the short-term issues or short-term questions are being answered, but the long-term consequences of these austerity measures are still an issue. That's why you haven't really seen any major recovery in risk appetite. Stocks are up today, but they're not up as much as they have lost over the past couple of days.
Kathy, could I ask you, the move by German lawmakers today, that $1 trillion package, is that going to affect anything? Is that going to change the landscape? Are we going to see any movement in the currency because of that?
The way it changes the landscape in the FX market is that it sort of reduces the volatility. Because that was one of the biggest questions, is that will they actually approve this package in individual parliaments? So if you remember, the reason why we had all this euro breakup talk was because Sarkozy came out and said, you know, if the Germans aren't going to approve this package, we're going to consider leaving the eurozone. So now that risk or uncertainty has been reduced significantly and probably eradicated to some degree.
Kathy,
and so,
you're talking about leaving the eurozone.
Right.
What about the money that's leaving the eurozone? I mean, Mark, Sarah Eisner were talking about this.
Right.
Is there real money leaving the euro? Are asset managers selling the euro? Are they trying to get out of the eurozone right now?
Well, we actually had some recent data on the money flows that sort of came in and out of the eurozone, and what we're seeing is that there's money leaving out of the money markets, but there's actually still money still net buying by foreign foreigners in a lot of the longer-term assets. But the domestically, there's a lot of outflows by Europeans into foreign assets.
Yeah.
So that's why the kind of demand dynamic we're seeing right now.